Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome. You're listening to Money on Tap. I'm Ben Brayshaw, joined here once again with Dan Michelon. We're so glad to have you with us today. We have an exciting show that I think is going to bring some real interest to kind of current events and what's going on with, as we title it, The Daily Bread, which I think is kind of a nice title for all that's going on in this world. You can reach us at 855-226-8551. You have questions, feel free to email us at info@yourmoneyontap.com. That's info@yourmoneyontap.com. Before we jump into our money in the news, let's talk a little bit about what we have coming up here, Dan.
Yeah, so the daily bread, right? So I'm going to talk about these expected food shortages, and there's a lot of news about that. We know Biden just had a press conference where that was kind of front and center, and it grabbed headlines all over the place. One of the points that came out of that was, at least at his present opinion, was that's not really a domestic issue so much as it is a global issue, but I think there's plenty of indicators around that say we might have some difficult times here ahead as well.
I've seen some shelves a little more barren at the supermarket myself these days, and I'm not a frequenter of the supermarket. My wife blesses me with that that coverage, but it is scary. I mean, it really is something that I think we are staring down kind of the barrel of not having enough food potentially, or the cost of food being just so dramatic we can't afford it.
Yeah, remember when COVID first set in, it was cleaning supplies and paper products, and everybody was freaking out and stockpiling, and I certainly did my share of that. But the notion of food being scarce.
Were you the guy selling it out of the back of that tractor trailer, Dan, the toilet paper?
I wish I was, but I was not. I have a basement full of it to attest to that. But yeah, those things are creature comforts, right? And not so necessary as food. So that's a significantly more concerning potential outcome here.
Yeah, our goal for the show today is really to give you enough background, a lot of information, a lot of history, a lot of current events, to bring that all together to kind of set the stage for people to understand the commodity world a little bit in an investing manner. So there's going to be a lot of information. Some of it will be interesting. I think some of it might not be, topic of choice for some people. But I think at the end of the day, you'll understand how it's portfolio relevant and something to consider as you're moving forward and making decisions yourself. And we would welcome to have a conversation with you if you have questions about your investing and planning or trying to figure out retirement. Feel free to give us a call. We'd love to talk with you. But before we jump into to our show topic, we have money in the news.
All right. First article of interest that we came across is something that doesn't impact everybody, but if it is impacting you, it's of tremendous concern, and I think this article is of a lot of value. But this is coming on CNBC from Michelle Fox. Most medical debt is coming off of credit reports. Here's what to do if yours doesn't. And really, the key facet here is that beginning on July 1, if you have medical debts that went to collections but were settled, they're going to begin to take those off your credit report, which, as anyone who's run into any kind of credit issue in the past, the lingering effects of a debt that you couldn't immediately address can really become a hassle in life.
I think we've seen a massive uptick in health needs, even post-COVID. I think we've seen, just things happening all over the place. And that's scary, it's concerning, and it does cause financial weight on a company. I think it's interesting, Dan, we bring up these articles and we kind of promise to talk a little bit more about the investing side of why we even bring articles up. When there's a debt, there's somebody benefiting from that debt, right? It's not necessarily bad debt. You have to take on debt to get health care. We have been big proponents. We've been long healthcare for a while now. And with the baby boomers, I think with the development of the number of people being retired over the next 20 years, I'm a big bull on the healthcare space. I think, honestly, between medical devices and just general care, even if it's nationalized, which I'm not for, as you well know, I still think that is a very profitable sector long term just because of the sheer demand of the aging population we have. And I think this debt concept and all the things we've gone through with the pandemic, there is money to be made in healthcare sectors because people just need care.
Yeah, and the other end of this is as it applies to personal finances, whether that's something we counsel people on all the time, which isn't necessarily directly an investment issue, but as money gets tighter and money gets more expensive with rising interest rates, lenders are going to be more careful. They're going to scrutinize applications that much closer, and your credit score is going to become more and more important to you. There's been a long stretch of basically free money out there, and providers of credit, certainly got a little bit more lax under those circumstances. But when they begin to appreciate more and more the value of their loans and how much return they can get off of them, that credit score is going to become more important to you.
Yeah, and I think the fact that you can get rid of the medical debt, even if you struggled through getting through that financially, is going to be a key component. We think of medical debt as like, well, that's not the credit card problem that I need to deal with. It's the hospital's got money,
right?
So it's usually the last thing we deal with.
But, we've all probably found, things in our credit report that shouldn't be there, whether they were errors or some kind of fraud or theft or who knows what. This is just another reminder to monitor those things closely. And, if it is a truly medical expense that you encountered and struggled to pay, be aware of these changes and these new rules about how those get reported because if you can knock it off of there, take advantage.
Yeah, next up, it doesn't really surprise me where this article's coming from. Only CNN would want to talk about prenuptial agreements, but no. But this article from CNN by Ramesh Maruf, which I probably just completely butchered, prenuptial agreements aren't just for the rich. Here's what you should know. This is really interesting. The concept of the prenup has had such a negative connotation for so many years because it lacked it didn't have that conversation of like, well, I trust you and I'm going to be with you forever. It was always kind of like, you want to do a prenup. But, with 62% of millennials growing up being raised by both parents, I think it's an interesting concept that they're walking in with just a shadow of, not doubt, but like it's just a different world. And I think that's what the point of this article is making. They said 62% of divorce attorneys, same exact number, said that they saw an increase in clients requesting prenups with a significant uptick of millennials signing them, according to a 2019 study by the American Academy of Matrimonial Lawyers. I'm quoting the article there. And I think that's really interesting because, we have a different environment. Before, it was kind of like one parent was really kind of the breadwinner, no pun intended to our show, but the breadwinner financially. And it was just an unbalanced, financial scenario. But in today's world, the husband and wives are both working. Women have the potential of even making significantly more money than men. And honestly, just because of creating diversification in companies, sometimes women are getting jobs over men. And so there's just kind of an interesting pull there going on. And I think that the polar scenario is creating, I'm working just as much as you are, and I don't want to have my 401k tapped by you because it doesn't work out in 5, 10, 20 years.
What I thought was interesting here, too, is a lot of the people who are featured in the article that experienced divorce as children, they saw the stress and the pain and the anguish of it, and a lot of that has to do with the finances of it and how those things would be divided and, what's real equity there. And what the benefit of doing this, at all ranges of wealth in advance of the actual wedding is that, you've basically settled in advance one of the more acrimonious and stressful parts of the whole process. So, if you've come to the conclusion
so it's part of the process, Dan? We got to be careful.
This is pre-planning. So, if you do reach the point in your marriage, unfortunately, it's not going to go forward, to take that major element of the argument of the story off the table, make that whole process a little easier.
No, I know. I get it. It's so there's they reference Julia Rogers, who's the CEO and founder of Hello Prenup.
I know.
So that was kind of an interesting.
It's kind of funny, right?
Yeah, it is funny. So, but at the end of the day, there's some legitimacy to this. I can see that. I didn't enter my marriage with a prenup, but but I think it's interesting that the perspective there is just like one you'd have in business. I mean, it's really like,
exit strategy.
Yeah, it's just an exit strategy that we have. Like
right.
if something happens, we have a full exit strategy. It's just the way it works. It's just not really thought of in the kind of the biblical sense of what marriage is supposed to be, which is for life, right? So it's kind of an interesting.
Well, it's certainly a different take on it, and for sure it's not for everybody. But a couple of things that are interesting to note in the article is, first off, you can't settle custody issues in this, right? So the kids are out of it.
Yeah.
So the yet to be born children can't be divvied up in a prenup. But the other thing that they suggest is that you don't do it the week before the wedding, in case there are issues to arise out of this conversation. That if this is something to contemplate, you want to do it 3 to 6 months out in advance of the wedding. So because I can't imagine this as an interesting idea as I kind of find it to be, it's probably an explosive conversation the first time.
Yeah, I'm not. I don't think I would have the guts to bring it up.
Yeah, that's a tough one to lay out there.
Well, here's another one to dig out. I'm full of puns today, Dan. Well, this article's coming from Market Watch. It's by Tommy Kilgore. It's the Hycroft mining stocks memester introduced rocket ride is making AMC, the movie theater, a lot of money. So AMC just bought out a gold and silver mine. Some of our listeners may know about this, but it's they've laughed about it because it's completely. I mean, they've acknowledged that they knew they were going to take a lot of flack for a movie theater buying a gold and silver mine.
One of the craziest things that came out of this pandemic is the whole meme stock idea, right? I mean, these companies that, and just to recap it for those who either weren't paying attention or maybe hadn't heard this in the past, there was a couple of companies that had extreme short interest. So they were just heavily shorted by other investors in the market. And
people were just betting on the thing just crashing and burning.
Yeah, they were terrible businesses that they knew were going to fail, and they placed their bets accordingly as far as the stock option goes. And, this one particular gentleman, I believe it started with, he noticed it, and he was on Wall Street Bets, which is just an investing forum for the general public. And he said, hey, listen, look at GameStop and AMC. These two companies the short positions of them are so high that these hedge funds are holding or not holding,
right,
and that they couldn't possibly fill them if we all buy the stock. And it drove the prices of these otherwise floundering companies absolutely through the roof. I mean, overnight, and really put these hedge funds in a position that was, truly terrible. I mean, they couldn't pay enough to even buy the shares.
I'm feeling horrible about this.
Yeah, I cried that night. But it's really amazing now that these companies, I'm glad to see that they were smart enough to take advantage of this. And, companies generally own a whole bunch of their own shares, of course. And when the CEO of AMC saw that, that his share price was
it
well
$70 or $80 a share or something?
That's one of my favorite stock stories. I sold it at 66, which is the absolute peak. I think I bought it at 5, but it was, he knew that the company was nowhere near worth the market cap that it represented, at that point. So he did the smart thing as a CEO, although it might have been tough to admit in the moment. He sold a ton of shares, raised $1.8 billion in cash from a company that wasn't worth in its sum total anywhere even close to that.
Right.
So they have $1.8 billion of cash on hand, and what do you do with it?
He bought a gold mine.
Yeah, that's what every movie theater would do, right?
There's going to be a movie about that.
Oh, yeah.
So anyways, they made a $27.9 million investment in Hycroft, which was highly shorted. And back in March, it was at 29 cents a share. It's now trading in the $2 plus range. They've over doubled their money.
They made $30 million on the $30 million they put in within a number of days.
Yeah, within days.
It's a good move.
For a movie theater. That's a whole lot of popcorn.
How do you want your popcorn? Gold on it?
Yeah, seriously. Well, I think this is really interesting because there's just you brought it up. I mean, I give you full credit for it, but like AMC, GameStop, they basically have moved away from being, a movie theater and, a game, console / game provider to SPACs, to kind of like overall arching providers of all sorts of different resources, right? I mean, what is the story on this?
Yeah, I mean, they just have cash on hand. In the acronym SPAC, Ben just used for those of you listening, it's a special acquisition company, which basically just says it's a company that already has a publicly traded symbol that will essentially lease their symbol out to a different business.
Yeah.
So that they don't have to go through the process of going public, which is time consuming and expensive. And if you're a company doing it for the first time, it's all encompassing. It can, knock you away from your focus of what you actually do. So if you can strike a deal to essentially rent a ticker, then you can trade publicly.
Yeah. And I think the interesting piece about this is that even though AMC wasn't really officially doing a SPAC and they were buying someone else's or buying more of their shares of another company that was legitimately a penny stock, literally worth pennies. So, the idea that is the concept of it, I think this really sets the stage for a different conversation about companies stepping outside of their breadth of expertise, right? I mean, no matter how you define it, AMC is a movie theater company. Like, they understand movie theaters. I don't entirely understand movie theaters. I know there's always a line to get popcorn, and I know they make a ton of money off of it, but I don't understand the financial mechanics.
I'm not sure they understood that business very well either, because they weren't doing so good.
Yeah, no, fair enough. But the pandemic definitely threw a little bit. Okay.
That's true.
In all fairness to them, but when you really break it down, I mean, I think about GE, and I think about IBM, and I think about these big corporate companies who were operating in lots of domains, lots of different areas, and even they have streamlined it to say we need to focus on our business model, a real core business model. Even though that they might be, I mean, GE had like 9 different companies, and they said we need to streamline this, but the 9 companies were all fairly related. They were in the same general.
Yeah, there's a lot of conglomerates out there, which is, I think, the point you're going to. But generally, you become a conglomerate because you buy your competitors in a closely related field, as opposed to going from movie theaters to mining.
Yeah, I mean, this isn't even in the same hemisphere.
No,
literally,
not even close.
So, anyways, well, that's going to do it for us in Money in the News. We're going to be right back. You can reach us at 855-226-8551, or you can email us at info@yourmoneyontap. We're going to be right back with your daily bread, the idea and concepts of what is food shortages really look like with Russia and the Ukraine providing so much of the world's population's needs in that area. So don't go away. We'll be right back. You're listening to Money on Tap.
Do you have an annuity? Do you understand exactly how it works and when to use it? The likelihood is that you don't, or maybe you bought it a while ago because at the time it sounded like a good idea. But will it accomplish your goals? We are here to help you. Contact us about a free annuity review and learn what your annuity does and how it can best help you in your retirement goals. It's absolutely free to you. And if there's a better way for you to accomplish your goals, this is a great way for you to learn about those opportunities too. Take the time to get educated, get empowered, make your retirement a success. Call us at 855-226-8551 or info@yourmoneyontap.com.
Now back to Money on Tap with Ben and Dan.
Welcome back. You're listening to Money on Tap. This is Ben Brayshaw and Dan Michelon. Well, Dan, that was quite the money in the news, but now we're going to jump in a little bit to Russia, Ukraine, the whole world food shortage conversation. Are we going to run out of food, Dan?
Well, it is the breadbasket of the world. That's not producing right now. So there's certainly some things to be concerned about there.
Well, we're going to jump into this, and we're going to dive a little deeper than probably everyone thought. But I think it's going to be interesting for you. You can reach us at 855-226-8551 or email us at info at yourmoneyontap.com. Food shortages, I think, are more real than just the conversation of it coming, Dan. I don't know about you. I was showing you the picture the other day. I was in the grocery store. And it was I was in a Hannaford. It was did I say that? I said that with a little New England twang there, I think. I was in a Hannaford.
It's on a Bob Marley routine coming up, is it?
Yeah, I know, right? He's great. But 4 coolers of milk, almost completely void of milk. I mean, it was. I've never seen anything like that.
Yeah, I saw it a couple of weeks ago with orange juice of all things. Just like, why would there be any issue with oranges in Florida, right? That should be fine. But yeah, there's a lot of news out there about the food shortage, and President Biden was saying that it's not going to be a domestic issue; it's more of a global thing, because we do provide plenty of these kind of the raw materials to produce food here domestically in the U.S. But the reality of it is when the world's in short supply, prices will go up. And, for whatever reason, supply chain, blame it on COVID, and we've heard all these excuses lately, right? Things are just harder to come by. And everybody experiences that. You cannot tell me it's not happening. And even if you do find it, it's more expensive. So this is an issue for us. The inflation in groceries has gone up 8.6% year over year, which when you're thinking of or speaking of just a critical piece of the budget, right? We all got to eat. And that's a pretty steep increase.
Yeah, I think the thing is that inflation is such a painful experience when you're at the grocery store and you're realizing I just bought all the same stuff I bought before, but now it's $20, $30, $40 more than I paid last week. I mean, the jump is just been so sudden. I think that's really what people are looking at. We were looking at, a little over 400 days or something in office. And, we've just seen a drastic change. And, it's hard to conceptualize. But my wife and I were talking just about the cost of gas because, that's obviously not an 8% increase. It's a 100% increase. That's a real piece. And I think what people are realizing is not only are they paying more for gas, but if you don't drive, it doesn't matter to you. But it is coming out in the food. It's coming out in the deliveries. Everything revolves around gas and oil and all the consumption of it, getting all the food to the places. I mean, it's just a huge problem for us. And it's driving everyone to kind of gasp. This is kind of like, wow, is this going to end? Is it going to stop? But with this food shortage issue, that's only another component to drive inflation higher. And I think that's really where I get very concerned because I don't think we've seen – I think, the question is this the tip of the iceberg? Is there a massive inflationary coming? Are we looking at not only inflation but the inability to buy food?
Because real hyperinflation. I remember, a year ago we used to joke about, you get the short list or the short grocery list and you're out, it's still $100 and you're like kicking yourself on the way out. Like, wow, how did that come to $100? Now you feel lucky if it's $100.
Yeah.
That's like, woo, yeah. I got the easy one. So it's a real thing, for sure. And it's impacting everybody's budgets, particularly the people who are listening on a fixed income. This is a significant hurdle now.
And I think we're not talking about basic, we're not talking about complex purchases. We're not talking about buying your, almond milk and your, whatever from France, butter or cream or whatever you want to, we're talking about basic necessities. We're talking about corn, soy, wheat, barley. We're talking about all the essential basic ingredients that drive probably 60 to 80% of all consumed products on some level, right? It's like everything you look at involves one of these things. If you're gluten free, you're eating corn tortillas.
Right.
It doesn't really matter where you stand. If you're a vegan, maybe you luck out a little bit, but you're still eating a lot of bread, right?
No, we're still feeling the effects of that Mexico avocado thing, and those are up 80%. It's an unrelated inflation spike, but it's still something else at the store, right?
I know. I bought avocados the other day. I went grocery shopping, Dan. I don't do that very much. You know that about me. But I was like, I'm going to make some guacamole. Well, they were hard as could possibly be, so that was not happening anytime soon. And they were like $2 a piece.
Yeah.
And I was like, well, maybe I'm making guacamole for myself.
Next month.
Yeah. So, I mean, there's some real issues here with the food shortage. I think the thing is that, there's a lot of conversation that this is going to be, and as Biden put it, it's going to be localized to kind of the Middle East, like where, Russia and so forth, I don't know, Dan. I don't know that that's really the case, but I'm in doubt. But what are your thoughts?
No, it certainly doesn't feel that way. I don't think so. And, I think clearly they're going to be in worse straits than we are, right? America can produce as much wheat and corn as we choose to. I mean, we're not
pay
impacted
people
by that.
to not produce it.
Yeah, I mean, we have a ton of waste in our whole entire food process. I mean, we've discussed that in the show in the past. As a terrible thing as that is, looking at the scale of what's about to happen globally, potentially, well, that's something we certainly need to remedy. And for a couple of good reasons. Number one, we can go sell it. Instead of wasting it, we can actually sell it to somebody. So
we're going to have to wake up some of these farmers and ask them to see if their tractors still work.
Fire up that John Deere, We get plenty of them in the Ukraine if we need them, but they come with a turret.
Well, I think the thing is that we've Russia and the Ukraine, there's some pause here. There's some hopefulness. There's the idea that, maybe there's an end to this thing here soon. And I think we want to chat a little bit about the two roads, like a resolved scenario and an unresolved scenario. I think in more of the hopeful scenario, and I'm just going to jump into the resolved side. I mean, Ukraine has already said they've missed their season. Like it's over. Like this year
the spring is happening. It's supposed to be fertilized and just starting to grow crops, and that's not going to happen.
Right. I mean, there's tanks in these fields. There's potentially ammunition that's live in those fields. I don't know, bombs, I mean, it's
not potentially, it's there.
Well, no, I know. But I mean, like they don't even know for some of this stuff what's potentially under the ground. So there's a lot of work that they have to do just to create the safe zone to be able to do that. And I mean, we just got a long ways to go there to rehab it. And I mean, 70% of Ukraine is farmland.
Yeah, I mean, and the challenge in the present sense is that it's the import-export game, right? So they import the fertilizer from Belarus and China and other places. Well, with the sanctions, they can't bring it in. And even if they were able to produce the crop, they export it through the Black Sea, in the southern ports, which are all occupied by the Russians right now. So there's clearly no shipping going on. So for this season, for this growing season, they truly are boxed in, and the world can expect probably close to nothing coming out of there.
Well, and I think what a lot of people are really concerned about is not necessarily even the exporting of the food themselves, but actually the idea that Russia and Belarus are responsible for 40% of the global exports of potash, which is fertilizer, globally. I mean, 40%. It's a huge problem.
Yeah, I mean, luckily for us, Canada's number 2, right? So, we have access again to probably everything we need to, have a rich crop season, and hopefully some of that, if we really maximize the output, we could, export that and sell that. It'd be a boon for farmers. And speaking to kind of the investment perspective of this, well, maybe there's opportunity there. Just like we could do with energy if we wanted to, right?
Yeah, we could open up a pipeline.
Pipeline for corn, we're all right with that, just not the oil.
Yeah, right. Yeah, it's not really the pipeline that's the problem. But I think that's interesting because, you bring me to another solid point that I'm going to enjoy exploiting here, Dan. But here, we've got, where was it? Now, I don't want to lose my thought here. We've got, for Zimbabwe and Kenya, they're basically the federal legislatures are pushing through to open up indigenous lands for the mining of potash under emergencies. So, I mean, I don't know about you, but we're shutting Russia's oil pipeline down to create problems for them, but we're shut ours down because it's good for us. So I think we need to open up drilling on our federal lands, allow us to get some oil, allow us to create some relief, all of that stuff. But I mean, when you start talking about Canada and providing potash and getting all that fertilizer, that's great and all, but we've got, Canada's not capitalistic. I mean, they know they're the only provider to us. I mean, we already know rates are going up. Farmers have already been reported for having kind of stockpiled, fertilizer to avoid massive rate increases because they're concerned about.
And so, I mean, just the cost of fertilizer last year, because of COVID and whatnot, was up 17%. This year, 3 months into the year, it's already up 12%.
Exactly. So you're talking 39% increase on just a flat scale, right? Not even counting the compounded side. I mean, there's another inflationary event literally getting ready to smack us in the face.
Yeah, so I mean, you can get back to the point of, well, there may be food on the shelves, but it's going to cost you more to get there.
Will Smith way.
I don't know how I missed that one. I should have left you a little more room there.
Come on, Dan. But seriously, right? I mean, I really feel as a consumer, and we're going to talk about the investment side of this thing. We're going to get there. But as a consumer, we're all feeling boxed in on all fronts. Whether it's the pump, whether it's the milk, whether it's the bread, everywhere we turn, it's kind of like, everything is becoming more expensive. How do we reach over those walls that are building up around us?
Yeah, and hopefully reverse the trend at some point.
Yeah, absolutely. So on the unresolved side of this whole thing, assuming Russia and Ukraine really dive deep and get involved again, that only prolongs things at a level that's probably even more problematic, because even though they're the 40% exporter of just potash globally, they also yield huge crops of, they're 22% of global exports of ammonia, 14% of the world's urea exports, and about 14% of monoammonium phosphate. But those are all additional key ingredients for fertilizer as well.
Yeah, and they're, kind of the end product. They account for 30% of the wheat exports in the world and 20% of the corn.
Right.
And those are the foundational elements of all the food we make. I mean, it's either wheat or corn is at the root of it, right? So, again, even leaning back to the point and hoping that domestically we can produce enough for ourselves, that is just going to drive the price up around the whole planet.
I think that's interesting because, I was actually thinking about the amount of, corn oil or whatever in various forms of gasoline. We actually, just to create corn production in our country, we've, mixed the ethanol in there. So it's interesting to me. I think you're right. There's definitely no problem for us to produce enough for ourselves, even with bad agriculture, right? We've got plenty of farmlands. We've protected that. And, I've mocked that. I apologize. I've mocked that by our government, but I knew it was strategic. I mean, I understand why we're doing it. This is a great reason to have that, and to have, paid farmers to not produce, but not to lose our farmland, because we need the ability to be independent that way. But I really think that the fertilizer and the healthy production and the quantity that we're going to need, we could become an exporter at a very expensive rate. Obviously, if inflation happens, we can export this stuff pretty easily with the cost that it does cost Americans to make it. But I am really concerned about the potential of, kind of the end class in our economy that's just barely making it by on a daily basis, not starving because of the cost increases. I think that's an issue.
Yeah, it's it's the unfortunate part is they're always the people that suffer the most, right, and suffer first. So you would have to assume and think that that's unfortunately going to be one of the outcomes here. And what can we do to support?
Yeah, absolutely. You're listening to Money on Tap. We're talking about inflation. We're talking about wheat. We're talking about the future of our ability to eat. We've got a lot on the investment platform coming up. Stick with us. You can reach us at 855-226-8551, or you can email us at info@yourmoneyontap.com. Stick with us, and we'll be right back.
On this Cliff Notes edition of Money on Tap, Seth, Ben, and Dan discuss this recent headline.
something that's probably interesting to all of us collectors. So things that our listeners don't know about Dan is Dan worked at a baseball card shop.
We did.
Last week. When he was a teenager. And I'm a big baseball card collector. I collected baseball cards my whole life. So we have a lot in common in that area. But this article from Peter Atkin, off of Fox Business, talks about the Batman #1 copy sells for $1.8 million, but it's only in fractional share ownership. This is really interesting. It's very interesting because there's a lot of collectible stuff that's becoming kind of like you own it, but you don't have it kind of stuff, whether it's electronic or physical. But this near mint condition of the Batman #1 comic goes on sale, and it's $1.8 million, and I think they're selling it in 10 lots, right?
$10 shares.
Yeah.
180,000 total shares out there. But they do have one stipulation built in that nobody can buy more than 10% of it.
That's what, yeah.
Yeah, so if you were one of those collectors out there that just looked at one of these things and was thinking, gosh, there's no way I could ever possibly participate in that other than just watching the news, this could be a great opportunity for you to become an owner, one of many owners inside of something that you genuinely are passionate about. And it's a kind of a unique opportunity for people that are in this whole deal. You know, we've talked a lot about like the NFTs and all these other structures out there that are becoming available for investments or ownership. Neat to see people thinking outside the box of how they can participate in different kinds of ownership and different kinds of investing.
Yeah, and it gets into the idea that that's what's going on here. I mean, they're talking about all sorts of various art treasures. I kind of thought it was a little humorous that the portrait of Jesus Christ is selling for $45.4 million. And if you thought that buying your way into heaven was an opportunity, that seems like a cheap price, I guess. But I'm not in that camp. So, I mean, it's just very interesting of all the different pieces of this world that they're selling in this capacity because people want to say, I own that. Next up, now this is interesting. I'm going to pass this over to Seth. Seth, you're up.
Yeah. Talking about different structures and things that are becoming popular. One of them that we've seen come to the market has been in the subscription services. If you haven't seen, there's movie subscription services and, I mean, outside of Netflix and all of those things, of course, there's clothing subscription services where they send you these boxes like once a month and you kind of sign up for these things and it kind of rotates through your closet. This one, however, I think is one that many people have been waiting for a while to see, and that's the subscription service for flights. And you could do up to 24 round trips a year for a monthly rate on the subscription service with Alaska Airlines.
Now, this is really interesting because, I mean, honestly, Flight Pass, as they call it, starting at $49 a month. I mean, we're talking like $600 a year. And maybe tickets and flights are easy and cheap right now because they're trying to attract flyers and COVID. I get all of that. I mean, how many times do you go and you're like, you can't find the flight for the price and the time that you want to do over? I mean, you search and you search, you search. And then at the end of the day, you still end up paying top bucks. I can't imagine that this $600 a year is going to make it easy for me to find the flight and the time and the airport that I really want.
Well, there's a couple considerations with it that may or may not fit for all of your travel plans. It has to be round trip, same airport, no connection flights.
If they don't fix, how to buy an airplane ticket without having to figure out how to do which one's the cheapest to have your bag or not have your bag, and they got so much storage underneath these airlines. It just seems silly that we have to fight about whether you have a bag or not, and it's going to change your price. So they've got to figure this thing out, I think, on the overall airlines world, because we've got mergers, we've got COVID, we've got the financials of airlines are struggling. I mean, there's just one problem after another. So a subscription service sounds interesting, but I feel like this is going to look more like my frequent flyer airline miles. They don't really amount to much.
Thanks for joining us for this Cliff Notes edition of Money on Tap, with great tips from the pros in three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. Now here's more Money on Tap with Ben and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. I'm Ben Brayshaw, and I'm joined here again with Dan Michelon. We are talking about some of the food shortages, and we're going to start getting a little bit into the investing and understanding where some of these things play and some ideas of maybe where movements might be as we move forward. We talked a little bit about Russia and Belarus being combined the largest level of exportation of potash fertilizer globally. But, Dan, who's the largest individual exporter?
Yeah, the number one country for exports there is Canada, in fact. So, and they export here to the U.S., to Brazil, really all around the world. So it's good to have such a critical neighbor when it comes to some of these natural resources, because you would think, obviously, if there's some kind of domestic issue, we would be probably first in line to pick up some of those exports. But it's a critical element to this whole farming and growth process and the production of all these different crops. And, it's honestly something we started looking at, probably 5 or 6 months ago, certainly way before the conflict. This notion of fertilizer came up, and there was anticipation even early on, prior to the conflict, that there was going to be worldwide shortages, some of it having to do with geopolitical stuff going on, already in Russia and some of the sanctions they were under, and China. And, it seems like forever those countries are an issue here for us as both a purchaser and seller of goods. So, the need for it is clear. The impact it has on the global dynamics of how we all eat is clear. So the ability to have access to it domestically is just a critical factor.
Yeah, and I think this is a big issue. And I think, what's interesting is, and where's China on that list, Dan?
They were fifth.
And so...
Fourth.
And the other thing is we're dealing with this whole other complex scenario where China is shutting down over another COVID scenario. And, they're the fourth producer of fertilizer.
So 3 of the top 4 are off the board at this point.
Yeah, we're talking over half of the world's fertilizers shut down. And, I think the thing is, it's not like we can't grow food without fertilizer. We just can't grow good food
or enough
of it, right? So it's like, hey, we can all plant a tree in the backyard and eventually it will grow, but that doesn't mean that tree is going to be vibrant and strong and it's going to yield strong fruit. And I think that's the one thing that, hey, we can get some stuff, but it might not have the nutrients. It might not have the things our body needs to be able to function well itself. I mean, there's all these compounded issues, and I'm not, I have 0 medical degrees, but I think we have to understand that, raw consumption needs to be healthy, right? And that's why we use fertilizer to have fruitful, strong crops. And so as we go through that, you start thinking about, okay, well, China's in the top 10 fertilizing producers in the world as well. So we've got a lot of different things that are going to drive this stuff up. And with fertilizer, you have a worldwide demand for fertilizer, and you got less than half of it being exported. And it's all China. It's all basically Canada. You have countries making exceptions to their, protected forests and so forth to export potash and to mine it. There's a lot of moving parts here because, just because they want to mine it doesn't mean they're going to have it tomorrow in a bag to go put it in the ground.
I mean, you would have to think, this growing season, almost on a global scale is going to be somewhat shot.
Yeah.
Because we couldn't decide to just plant, crops today, and, even smack dab in the middle of Iowa, and expect to have a bountiful crop anytime soon.
I would actually probably, I have 0 evidence of this, but I would probably think that there's probably more foreshadowing on that for the same reason that, a lot of these farmers have already stockpiled, fertilizer.
Yeah, we talked about the price increases that were already in effect pre-conflict. So you would think, the wisest amongst them would have already been
like, hey, listen, we're planting even though the government's paying us not to. Because there's going to be a market for it.
Hopefully there's enough of them with foresight to have done that, yeah.
Yeah. And, if they're stockpiling fertilizer, I think they've got that foresight. So one of the things that you and I were chatting about from an investment standpoint, and, obviously we made some significant moves into, multiple providers for, for commodity plays that would engage wheat and barley and all the different things, but also beef. Cattle, we took a position that held some exposure there too, and we did that earlier this month. There was a huge pullback in it. We were trying to get into it earlier. We didn't want to jump into it too soon, and I think we took a nice position. We've seen some decent performance from that since. But I also think that there's some real conversation around the investment in domestic food producers.
No, absolutely. Yeah, I mean, again, going back to the issue of, what's on the shelves and, what can you even buy, but people who are, producing packaged and prepared food, you would think that market is just going to really skyrocket.
Yeah, and I really think that we probably haven't seen what that means just yet and the exposure piece to that. And I'm also curious where I'm also very interested in how the inflationary environments are going to affect kind of the fake meat market. I was just wondering if, all the arguments about how expensive, beef and meats and all of this are, if inflation with wheat and all of these commodity trades is so advanced, I mean, if it's just really going to cause this hyperinflationary environment, which I'm actually, I don't know what the definition of when you actually hit that hyperinflation, but I would tell you that anything over 10% is hyperinflation to me.
Yeah, I was just thinking probably double digits, right?
Yeah, right.
So that makes sense.
So, for that standpoint, if we're looking at food shortages across the board on all of these natural resources, I think beef's going to be the cheap option. And I think that's going to be an interesting play. I think there's going to be more demand for beef and chicken just because, Well,
the hard part to that is, what do you feed these things? The cows and the chickens, they get fed these same materials that we grow from.
Yeah, the grains are hard. That's true. I mean, I'm a grass-fed beef kind of preferred person, Dan. So, I mean, you met my wife, right? so maybe that's going to be a more natural cattle. But I was, just thinking about, buying. We used to split cows with people and stuff like that. We've done that a number of times with local farms. It's great. It's great meat. It's really good. It's healthy. It's grass fed, Dan, most of the time. But I think there's going to be more opportunities to really seek that type of, managing of your food consumption, right?
Yeah. Well, we're certainly all going to be more mindful. Just the cost factor alone, you hope we reduce waste on a household level and on the national scale. But, a couple of things to take a look at, again, from kind of the investment side of this stuff. So we just did a show on the lost decade, right? And we were making reference there primarily to the S&P 500 and the experience it went through from 99 to 08. But what we're coming off of is the lost decade in the commodities world. And, that's one of the indicators we looked at that kind of triggered us to make a move into that space and seeing how prices had risen. And this really plays that example out. So if you look at the returns for wheat, WAT, which is a ETF for wheat, the 1 month returns there, it's up 21%, 6 months, 24%, 1 year. So, well predating the conflict and those kind of the build up and the anticipation of the war, it's up 40%, but the 5-year return's only 4%. So it's coming out of a real stagnant period there.
Well, I know 5 years you only made 5%, but the thing is that's really interesting is you said something that's important, that this is pre-war. Pre-war, It's up 40%. Like to now, obviously it counts the war, but where was it right when the conflict started? 6 months? What was it?
21% in a month and 24% in 6.
Right. So you're looking at a huge sway here. The delay on production moving forward, no matter what the outcome is our point. Is we have a fertilizer, wheat, barley, breadbasket conversation problem for years to come.
Yeah, we had a rising cost, or from the investor perspective, a rising return environment, and we just cut half the supply out. Half of the global supply, roughly, is not getting off the shelves this year or out of the ground.
And then when we actually back into, when we talked about the lost decade and we talked about, the different areas where you can actually make money. When you look at the IFA, Europe and Asia, and you look at all of that kind of trends, like, those marketplaces, the value of those assets are going to decline because they're not going to be producing revenue. There will be an opportunity potentially to take a position in that exposure to really ride that back up.
Yeah, and so, who's going to fill the gap here? Somebody's going to do that. Is that these South American producers? Is it going to be us here in the U.S.? Obviously, Canada is well positioned for some of these materials. The problem that scares me about that is if we become a massive exporter.
Just because of where our minimum wages are, the expenses. We live in the most expensive. If you make if you just collect on Social Security, we did this show a long time ago. If you just collect on Social Security, you're in the top 1% wealthiest people in the world. Just Social Security people collecting in the United States. So for us to be an exporter of agricultural goods, which is why we pay farmers not to produce, okay, it just doesn't make any financial sense globally. Because, I mean, people who are buying things in the peso are not wanting to buy, a piece of corn for $1 from us. Right. I mean, they're not going to be smashing that corn for $1. So
want to and need to.
Exactly. So I think that's the piece that I think concerns me about what we'll be paying at the shelf ourselves, because the export demand will be so large. And now you're going to have countries stepping in, paying for the food for their people at rates, which is just going to send the demand level astronomically high. I mean, I think we're looking at major financial problems. I think when Biden's talking about food shortages and that it will or won't hit us domestically, I think that's a load of garbage.
Transitory.
Yeah, it's another transitory that will turn into permanent. And I think we need to be careful. We think about this stuff. I was listening to Jan Markell. I referenced this one other show a while ago, Understanding the Times. I like listening to her from time to time. Love to get her on the show sometime. But she was just talking about, how the Bible references, indirectly the demand that, a loaf of bread will be a day's wages. The idea that wheat and barley will be, those types of commodities will be a scarcity, that it will cost you an entire day's worth of work to get a loaf of bread. I think that's a very interesting parallel in today's world.
Hopefully that's not where we're headed here.
You're listening to Money on Tap. We'll be right back. You can reach us at 855-226-8551. Thank you for listening. Don't go anywhere. We're going to wrap this show up.
Call us today at 855-226-8551 and get your free consultation with Ben Brayshaw or Seth Krussman or any one of our partners, and find out what's going on in your plan, your estate plan, your financial plan, or what you're planning at all, if nothing. Get it fixed, get it right, get it done today. Give us a call at 855-226-8551.
Now back to Money on Tap with Ben and Dan.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw. You can reach us at 855-226-8551. Dan Michelon and I are going to wrap this up real quick here. You can reach us via email at info@yourmoneyontap.com. Dan, we were just talking about some of the global exposures people might want to be considering to look at. Go ahead. You were just...
Yeah, I think the thing to be looking for, and there really isn't an answer that I'm aware of yet, is, so who's going to fill the supply gap? Is it going to be the U.S.? Is it going to be South America or other fertile places that aren't impacted by this conflict that could potentially step in and provide some supply? So those emerging market ETFs and funds would be a good place to look. And keep your eyes on the news about specifically addresses to the agricultural issue and this global food issue.
Yeah. Consumers of the potash will probably be the ones that will be looking to produce as much. I mean, if you own the fertilizer, you have the fertilizer, you're going to be the one that's going to produce it. I think Russia's really hoping to manipulate the conversation to say, we've got the food, we're willing to sell it, but we got to talk. I think that's going to be a negotiating point for them.
Yeah, I mean, you really got to think about, from beginning to end, the entire process of how to produce food and at what different levels is it sold, right? So you get the fertilizer, we've talked about that. You've got the agricultural growers, right? Then you've got the people that take those products and make a packaged food product and sell that. It's kind of always the American way. People are going to buy the quick and easy thing, right? So if it's prepackaged food and it's generally in short demand or short supply, demand will be high. People will buy it. Grocery stores, restaurants. So when you think of this issue of global food shortages, and considering how important it is, right? We all got to eat. So you would think that every step along the way is probably an opportunity that needs to be, well considered and kind of vetted out. But those would be the things I'd be kind of paying attention to in the news.
Yeah, I think that's well said. And sarcastically, we're joking around, AMC might need to buy a wheat field on top of that gold mine that they bought.
That's right.
Might be the next good investment for them these days. Well, hey, you've been listening to Money on Tap. We appreciate you being with us. You can reach us at 855-226-8551. You can also email us at info@yourmoneyontap.com because it's about your money. And we hope you've benefited from today, and we look forward to talking to you next week. Have a good one.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.